There's a massive change coming to the U.S. tax code. But what's really wild is you're not going to see any new laws being passed or big debates in Congress. That's because this change, it's already set in stone, and the IRS is simply waiting for the calendar to turn.
And that date is January 1st, 2026. It marks the sunset of the tax cuts passed way back in 2017. See, unless Congress decides to act, a bunch of major tax provisions are just going to automatically expire, and one of the biggest ones is the federal estate tax exemption.
Right now, we're actually living in a period with the most generous estate tax exemption in U.S. history. For 2025, an individual can pass on over $13.6 million completely tax-free. But when the clock strikes midnight on New Year's Eve 2025, that exemption gets cut, roughly in half, dropping to a projected $7 million.
And if your estate's value is over that new lower limit, well, the consequences are severe. We're talking about the federal estate tax, a steep 40% tax on every single dollar above the exemption. Yeah, the stakes don't get much higher than that.
Let's make this real for a second. Think about a $20 million estate. If the owner passes away in 2025, their heirs could owe zero in federal estate tax, nothing. But if they pass away just a few weeks later, in 2026, their family could get hit with a tax bill of around $5 million. That's a life-changing amount of money.
What's really interesting is the timing of all this. I mean, this tax change isn't happening in a vacuum. It's landing smack in the middle of what experts call the Great Wealth Transfer, an estimated $83.5 trillion that's going to move from baby boomers to their heirs. This tax cliff is positioned to intercept a massive portion of that transfer.
So, for anyone affected, the big question becomes, what do you do? Well, a whole playbook of defensive strategies exist. Things like irrevocable trusts and strategic gifting are basically ways to move assets out of your taxable estate before the rules change. You can lock in today's high exemption. Other strategies, like life insurance trusts, are designed to provide the cash to pay a future tax bill without having to sell off family assets.
But it all comes down to a really simple timeline. 2025 is the last full year to make any of these strategic moves using the current record high exemption, because on January 1st, 2026, that opportunity is cut in half. It is a true use it or lose it scenario.
Ultimately, that historic transfer of wealth, it's going to happen. So the only question left to answer is a pretty simple one. Who will be the primary beneficiary of your life's work? Your heirs or the IRS?